So the Federal Reserve has just cut interest rates by 50 basis points. This is the first time they have cut interest rates in the past 4 years. Now, this could mean there's good things or there's bad things to come. Today, I want to break down what is happening, what this means for your savings, what this means for real estate, what this means for the stock market, and so much more. So I'll address all this in just a moment. But the one thing that you need to understand is this is just the beginning. There is likely another rate cut coming in the next couple of months. We are likely going to see rates drop for the next, 3 to 6 months. So just be aware, we are likely to see some forward momentum, which could be great for the US economy, or it could be devastating. So I'll break all this down in just a moment, but all I ask is one thing. It takes 2 seconds. Go ahead, hit that like button if you enjoyed these daily updates. And now let's begin. So it's crazy to think about that the time has finally come. The Federal Reserve has decided to lower interest rates by 50 basis points. Now, here's the reason why this is such a big deal. We have been waiting years for them to do this because according to the Federal Reserve and the Federal Reserve Chairman Jerome Powell, he said inflation, and I quote, was transitory. Well, it was, but transitory took about 4 years. But here's what you need to know. Why did the Federal Reserve start raising interest rates in the first place? What was their mindset behind that? Well, it's simple. The Federal Reserve had to raise interest rates and push them up to the 5.25 to 5.5% for one simple reason: to bring down inflation. Inflation went up to 9.1%. That's the highest it has been since the 1980s when it was 14%. This was crippling US households. Nobody could afford to buy food, to keep a roof over their head, to pay for medication, a car payment. Nobody could afford it because it was too expensive just to live here in the US. That's why the Federal Reserve decided to raise interest rates to bring down inflation. Well, today inflation is at 2.5% according to reports. Now, how is this going to affect us moving forward? We are going to see the Federal Reserve come back and lower interest rates again. This isn't the last time they're going to do it. We are likely to see interest rates fall another 25 to 50 basis points in the next month. Now, here's what you need to understand. How does this affect the stock market? How does this affect real estate or even savings? Well, let's start with the stock market because this is one of the questions I have received just dozens and dozens of messages over the past hour or so asking pretty much me, or people asking me, what are we going to see with the stock market? Is it going to sell off or will it run? Well, here's what I can tell you. Historically, when the Federal Reserve decides to cut interest rates, we see the stock market do very well. Historically, okay, just over the past 12 instances, just to give you an example, over the past 12 initial times when the Federal Reserve decided to cut rates, okay, what happened was we saw the S&P 500 go up, okay? Over the next 12 months, it usually did well. 12 of the 14 instances did well. The highest return was 35.1% back in 1954, and the worst return was in September 2007 when we saw a negative 17.6% return. But here's what you need to keep in mind. The two negative years in the stock market came after a recession. The recession of 2001 and the recession of 2007. That is when it happened. So every other instance, the Federal Reserve just decided to cut rates. But in those 2 years, 2001 and 2007, that's where we saw a recession. Now, here's where things get interesting. Based off of the reports today, we have less than a 10% chance of a recession in 2024. However, we have a 50% chance of a recession before 2026. So within the next 14, 15 months, there is a 50% chance of a recession. So according to reports today, the stock market should do well. However, it's not a guarantee. Now, real estate. This is another big question that I've been getting from many people. Should they go buy a house right now because interest rates are falling? No. According to reports, we've already seen these interest rates, the cuts from the Federal Reserve get factored in. So it doesn't matter that they cut rates today. The rate that you would have received yesterday is probably very similar to the one that you're going to receive today. Now, if you wait an additional 3 months, 6 months, or a year, you will likely see rates come down even more. And that will be a great time to buy a house. But at the same time, keep this in mind. Experts say that you should buy a house no matter what, because over the long term, the little bit that you're going to save on your interest rate is not going to be enough. Okay? So, I'm not no financial expert. I'm not here to give you financial advice. That is just what experts are currently telling us. Now, here's what I think is interesting. When it comes to savings, what you are going to notice is if you have your money in a bank account, in a savings account, the interest rates from the Federal Reserve just dropped by 50 basis points. Guess what that means to you and your savings? Your savings rate is going to fall. The interest that you receive on your savings account is going to drop. If you have a CD, that's going to drop. Okay? Keep that in mind. So it's good news if you're going to buy stocks or you're going to buy real estate, if you're going to go and get a loan, right? Because rates came down. But if you're going to take your money and put it into savings, well, that's bad news because, again, the rate just went down. So keep that in mind. Here's the next thing you need to understand. What is going to happen to credit cards? What is going to happen to all those loans that you have? Well, if you want to refinance the loan, you could potentially save a little bit of money. But when it comes to credit cards, your rate is pretty much the same. Your rate's not going to move much. Okay? And if you do have a balance on your credit card, pay it off. Simple enough, just pay it off. Now, I want to leave you with one last thing, because I've been getting a lot of questions from people asking, are we going to see these rate cuts? Is this going to benefit businesses? Are we going to see businesses go and hire more people? Well, here's what I can tell you. As we see lower interest rates, there's a higher chance that businesses will go out there and get a loan. They'll go get a loan and they'll start to do some R&D, some research and development, and build their business and grow. But as of right now, rates are still too high. Most businesses are not going to go and get, a couple $1 million from a loan. They're just going to continue on the path that they're on. They're going to try to remain profitable or become more profitable in the sense of like Amazon, Microsoft, even Boeing, and eventually they'll go and hire more people. So if you're thinking that this rate drop is going to mean more hiring from businesses, it probably doesn't mean that just yet, but we are about 3 to 6 months away. The expectation is that in 2025, most likely in the first to second quarter, we are going to see somewhat of a shift. As we see this shift happen, more businesses may hire, but keep in mind, the concern right now is interest rates are still fairly high. One of the big issues we have, and potentially a massive crisis, is a commercial real estate mortgage crisis, where there's $1.5 trillion in commercial real estate that has to be refinanced in the first quarter of 2025. If it doesn't happen, banks could potentially go under. We could see millions and millions of people lose a lot of their stuff. So just keep in mind, this is coming. There's still some tensions, moving forward. But as of right now, at least we know the Federal Reserve has cut rates by 50 basis points. So if you have any questions whatsoever regarding what the Federal Reserve just decided to do or how this could potentially impact you in your specific situation, you can always comment down in the comment section below. But again, thank you guys for watching. Consider subscribing, and I'll see you guys on the next one.